Welcome to Trading Lounge and the European indices, but I'd like to start with the Nasdaq first because the DAX has a relationship in terms of the much larger trend with the DAX. And in this case, and obviously the tech stocks have been leading higher when Google Alphabet hit 1,000, then we had that severe correction from that point here, and that's basically the Google thing here. So we're waiting for a reaction from this point. But I can see with Alphabet here that this particular trend here to the upside is not finished. So I know that we're experiencing all the downside that we're experiencing at the moment is a correction, and I'm pretty sure here that the sharp move down is 5 waves, and then we've got an A and a B and a C wave here. So I expect one more move down here, and how that will affect other markets as such. So it's sort of being driven from the Amazons and Alphabets and so on here. So this wave count could come out one more degree as well. So this could be a blue wave 4 here rather than a green wave 4, which would be correct. I just haven't changed it, but it's the labeling that's more important. And this move down is a sharp move down here is a daily chart. So when we look on this chart here, which is a 1 hour chart, that sharp move here obviously is this move here, which can be counted in 5 waves to here. And then even though that the Nasdaq has got a lower move here because it could be counted as an A and a B and a C to here, on the Google here that's not the case. That little sharp move here is above rather than this one here. So an A and a B and a C wave here with another move down. So I think this is the case here, and it makes it interesting here because if we've got the A wave here, then an A and a B and then a C wave to here for the B wave, then the C wave should come down here. And the other point here too, from B to C here, we have this 1 and 2 and 3 and 4 and wave 5 here. So realistically, we don't want to see support on this level here. In fact, I don't even really want to see a new high here. I haven't taken this out on a tick chart yet to see if we've got the 5 waves in here, but I can see a beginning and a middle and end. Yeah, I don't want to see support here. So we should see failure from here as such, and having another 5 waves down, a bit of equality to this move here coming into play over here. So I just wanted to look at that Nasdaq and Alphabet first, just to give us a bit of an idea of sort of where things are. The other point here before I go into the other markets is the German mid-cap, because the German mid-cap here has been a strong trender as well here, and it's pretty much sort of correcting along with the Googles here as well, but it's doing its own thing here as well. Now this is a little bit of a tricky count here, but we've had the first move down here, which we can count as an A wave, and then an A and a B and a C here for the B wave here, and then looking down for 1 here, and the retracement is back into this box here, but this first high over here comes quite close to the 50% here, but there's still more space for this to have a little rally into here before moving down here. So yeah, just be sort of mindful of that. And when we come to the DAX here, I want to look at the DAX in two ways here. I want to look at it in a positive way and also in a negative way as well. So I really want to sort of talk strategy, because this was so sort of messy over here. We just need to be a little bit sort of caution, and we don't want to miss anything. So in a nutshell, for the positive side, this count is viable here because it's got 5 waves up here. We've put this as a wave 5 top, which is also valid as well. And we are expecting a correction, and we've got that, and we're looking for a rally and then down again as well. But if this 12,800 here develops a support, then trade long. But I wouldn't be able to confirm this move here as an upward move unless we had support on top of the 61.8% mark. So if we had a a move here with support here, then we would look to go long from this point here as well. But if we do get support on the 12.8 here, then you can trade it up to up to that say 12.850 here. Yeah, so just be mindful of that. So we're just looking at the two sides here. So as it stands at the moment, it certainly can be an A wave to here, a B wave to here, and a C wave to here, and finishing that point and just moving down from this point here as well. And that's what I also want to look at. But I just wanted to point out, if we get support on 12.8, then you need to be trading on the long side here, because that is the resistance here, right? So just be aware of that. I'm sure you are. I just need to repeat all the basic things all the time. And on the 15-minute chart, if we're looking bearish, then this is what we're looking at here. So we could look at this as wave 1 or wave A here. It doesn't really matter, but we can look at this as an A wave to here, then an A and a B and a C wave to here. And with the C wave moving up here for this one here, this is the target area that we're looking at here, but at the same time, this can count as an A and a B and a C wave to here. So it's possible that we can have it already in here, okay? Now, I can also see too that this little move here is in 3 waves so far. It might move down further from here, but it's 3 waves as it stands, as an A and a B and a C wave here. But if it drops lower from here, then it becomes more bearish from here. So the safe trade here would be from this low here to this high here. If this starts to continue to fall down through here, then this level here, the 12,750, is roughly the 61.8% mark here. So if we use this setup here, this will get you in on the short side. This is the safe trade, okay? Yeah, because any move, let's just say that this moves down through to here, you're going to get a bounce off here anyway, okay? So you'll be able to work that from that particular point there. Yeah, so this does sort of count okay as 5 waves to this point for wave C here. So that's what I was thinking, that if this doesn't breach this 61.8% mark here, then we would actually have to look at this as wave 1, wave 2 back to here, wave 3 here, wave 4 and wave 5, or fitting into that space there. That's why going long on this support here would be the logical thing to do. The other short trade here that you can take that has more risk in it, of course, is depending on what happens today, is taking out this low here. But there will be a bounce off the 12,750 here that you'll need to negotiate at that point. And it doesn't mean that it's bearish at that stage, because only bearish as confirmation, as evidence, as the 12,750 as a retested resistance. So it's moved down here, gone back up and tested it, and then breaks down. So being short 1 point below that little area there. So I think it's good just to have strategy at this point with this market. And that really sort of comes into the AEX as well here. So let's just, and France as well. So France and the AEX are pretty much the same sort of thing here. So in the bigger picture, as you know, we were looking for this market to move down lower into the 510 and the 500 here. And I don't know if this is the best count or not, because this is just really quite messy, as I've pointed out before, and I'm a little unsure about it. But I also know too that when we're working with the trading level, so we've got 500 here as a major trading level, and then we've got 10, 20 and 30 here as minor trading levels. I know that if the 520 here, the number 2 basically, if 2 here becomes a retested resistance, then I know that it's normally doomed after that, and then we can bring it down to the closest largest number, which would be the 500 at this stage. So this move through here would have set, would have been part of the setup here. So we would have had, well, I would have naturally just had that there and looking for a retest here and a failure at that point, and that would have triggered this one, but it never happened. So that's okay, so we can remove that. But in this case here, we've moved down here, so we would have had this one here sitting here, that's what I would have naturally done. So that point, and then the market's moved back up through here, and then it's created the second low here, so I can get a better entry in here now, you know, for this. So I don't know if it's going to move lower at this point here. I can see that we could look at this as the A wave to here, then an A and a B and a C wave to here for the B wave, and then moving up into the C wave here and then failing from that point there. So, you know, we may not get triggered here either. You could look at this low and this high here and look for the 61.8% and then move that up into that space there as well. Or we could look at the closest largest number here, which would be the 18. So if that became the retested resistance, we can look to be short here as well. So even though we're bearish, we're waiting for the bearish move to confirm, to prove itself. So that's why we've got these triggers in here to help us do that. So as it stands at the moment, this move from here to here, this is the 61, 50, 60% retracement level from here, so I'll just put that there as well. So it hasn't, you know, it hasn't rallied back up there. Not that it has to either. I mean, I know that the 2 is a strong number here. So yeah, looking for these triggers. So we don't need that trigger there. I won't put that one there. I'll just leave that one there for the time being. And yeah, if you see weakness, then you need to short that. If this market moves up into this space here, yeah, you could trade long off this if you got support, but you will certainly have problems at the 23 here. And the 23 here as well is that if you're intraday trading, you would also look at the sub-level, so 1 here, 2 here, and 3 here. So if this is quite close to the 61.8%, so if there was a really solid support on this level here, on top of the 3 here, then you would also need to be looking to go long at that point there as well here. That would be the next leg up from that point, because I've got this here as all of the A wave to here, and then the B wave back up to here. So the B wave pulled back up 50, 60%. So it's, I mean, it's quite possible. I don't think it's the case, but it's quite possible that this wave 1 here can be the C wave here. So an A wave here, complicated, simple B and simple C, and then move up from that point. So we know that that would be the case if this 5, 2, 3 here, 523 became the tested support, not just trading above it, but coming back and checking it as a step, like walking up a set of stairs. You step back on it and you feel the weight of it and you feel it's safe, and then you can move on from that point. That's what you need to be looking for at the number 3 as always. Yes, but being in group 2 here, the number 2 here being the resistance is certainly a bearish thing here. I'll just have a look for Unilever. Okay, so Unilever here, we've spoken about this a couple of times, I think, and yes, the move down here appears to be 5 waves, so we were looking for a rally after that, and then another 5 waves coming down through here. So, you know, we can obviously see the market is working with number 5 here, the 50, the second strongest number, and it's you know, we don't have a trend here so far. So I mean, if we were looking to go long, then we'll be taking this top out. If we're looking to go short, we'll be taking this one out here, but we don't have to wait for these here, because that would have been the first one. We're just narrowing it down into this space here. Do you know what I mean? Until we can get and we'll probably get another little high in here, then we can reference that one here. So we're just really working it into a breakout point here, but at the same time trying to understand what's actually going on here and getting a bit of an idea of various ways to see this, and the price is one of them and volume is the other here. So we can see that in the move coming down here, we had increasing volume here as the move's coming down, so that's bearish. And then these two were corrective here, trying to push up, but they were pushing up on lower volumes, so we know that they are weak here. We obviously see the dominating buyers dominating the day here, so that's fine. But we can also see this bar as it pushes up higher here. We can see that the volume is diminishing compared to the relationship between the volume bar. So it's the how to read volume is there's only two things it needs to really look at. Then it refines from there. And the first one is the relationship between the current volume bar and the previous volume bar, and then also the relationship between the volume bar here and the price bar here. So we can see, for instance, this moved up higher here, but it was on lower volume than this one here. So really that's divergence. Then we can see this one pushes up here on lower volume than the previous one. So we know it's basically, yes, it's moving up, but it's moving up on really a lack of buyers. It's really meaning no sellers, you know, and very few buyers. So here we can see this push up here, yesterday's bar here pushing up here was on lower volume than this bar. So we know that this rally moving up here is going to be weak here at this particular point here. So we don't see any strength in this at the moment. I can only go to the 5-minute chart here to look at this situation here. So we know we've got our 50 in the middle here. That's our balance line here. We know that this move down here, if there was, we couldn't be long unless this level here, it should be, let's just tag that out there. So we couldn't turn bullish unless that became the support. It's as simple as that. Okay, so that just sorts out a lot of Elliott work in a way. So it does appear that this is impulsive down through here. So this looks like an A and a B and a C here. So it looks like we've got a rally here. Obviously this market wants to cover that gap here as well. So okay, that's covered already. So that job doesn't need to be done now in there. This is corrective. So we should still push higher from here. But the good news is that you know, even if this pushes high, tries to push up into this space here, I don't really think it's got. Let me just double check. See, this move here is corrective. This move is all corrective as well. So I do think that we've got probably got higher to go here into this space here, but then we should be looking at it moving down from that point. Let me just. So I have to look at that to here. That's to there. I mean, this little move here, I just need to investigate this. And even though that's the low there, this can actually be the low here as well. I just need to. No, we can use that low. That's the one. Where does that leave us though with this pattern? Let's just double check this one. Yeah, I'm happy with that being 5 waves. We looked at that before. I mean, this does look corrective here. I just can't nail it down, that's all. I just need to do some work on it, and I don't want to be doing, if I can't see it straight away, then I need to do work on it. I don't want to waste your time here. But main point here, takeaway here, is that at this particular stage here, that's the short here under this low here. You can come a bit higher than that, of course, as well here, but that would be the short trade at that point there. I need to move on to France and then the UK as well. So let's just find France. Okay, so France, we're just talking a bit like the AEX, we're just talking strategy here. So what I wanted to say here is that to look to be short under 5250 here as a retested resistance here, and otherwise we can come a little bit higher here as well. But I would still like to call this the A wave here, the A, B and C here for the B wave, and then the C wave up here. So 1 and 2 and 3 and 4. So we can still go a little bit higher here, and then we can come down here. So that's sort of how I'm looking at this here. You could only turn bullish if the 5-3 became the support here, partly because of the trading level number 3 here being a minor trade top of minor trading level 1. It tried to so if I was going along just using the levels, then we would have this one here as the high, and then we would be looking for a better high, but we wouldn't go long under this level here. We would need support from there, and also from that high to this low here. This is a 61.8% mark at the 5-3. So support on a tested support on 5-3 would be the long trade at that point. But otherwise, I think that you just need to sit and wait for the short trade. And I think that this is the A, the B, and 1, 2, 3, 4, 5 for the C wave here. And then you can short from that point there. So we could look at this as the A wave here, the B wave here, the C wave here, this is wave 1 here, and this is wave 2 here. But I can't confirm that because the other irony here is that this here is also 5 waves as well here. So this is either wave 1 here or wave C here. And I just want to be open to that at the moment. As such, I know that the other US markets and all the rest of it got to the downside, and that's why I'm looking at this being to the downside here. But the trigger here would be under the 5250 here, and any long trade here would have to have a nice tested support sitting on top of the 5-3 there. So we're going to be moving up there. Probably to this level, then there'll be a reaction. Then you don't even want to chase the first high above the level. You want to wait for that to come back and test at that point and then move up. And that way you'll get your first high above the level, which is your reference point. And then, of course, you can bring it down to the next one here as well here, but that needs to sit on there. And this is much the same for, I'll just save that there. And this is much the same for the UK market here as well. So with the UK market here, it's a corrective pattern going sideways here, and I can look at it in terms of wave A here, then an A wave and a B wave and a C wave for wave B, and then I can look at it down here as wave C as being completed here. I could also look at this move down here as just wave 1 here of wave C. So then wave C would come down here and have 5 waves in it, and that would be wave 1 here, an A and a B and a C here for wave 2, and then down for wave 3 here. So that's how I'm considering this as well. So we need to be mindful here as well. This move, obviously we've got these lows here, and we're at 7.4 here, the whole number, but you know, this low and this low, this is going to see a bounce here, but I do think that's all it's going to be this time. It's really the third time that it's tested it, you know. So an A wave and a B wave here, and then a C wave up here, and then folding here. But even if this comes back down here, it's just going to hit here, come back up in 3, and then move down, you know, do its thing here as well. So these here, these would have been reference points at their time here. They wouldn't have been something that we don't trade the breakout on these things here at levels. We wait for the retest, and then if it fails the retest, then we short. So that's what we'd be looking for here again here as well. People will see this and they'll want to push this higher, and this is where it would come to here. This is the 50-60% retracement level. If it was going to go, then fade from that point there. So we're in a corrective mode across here, which really opens it up to you know, a whole lot of different types of corrective patterns. That's why I'm struggling with this one, the AEX and the franc and so on, you know. So it is a little bit difficult. So it's just strategy that we need to be in play. But there will be weight from the US side of things as the Nasdaq corrects over the next few sessions. Okay, cheers.